Good day, guys. I hope you are well. My name is Avio Ngaya, and I'll be presenting to you the donations tax tutorial. Yeah, I had I had recorded the tutorial during yesterday's tutorial, but I mistakenly pressed the power button instead of the multiplication button. Like if you have a picture of the laptop keyboard, and that essentially destroyed yesterday's recording, and I was trying to like convert it so that I could get it because I was almost done with the tutorial. I was probably left with the last bullet point before I could before I could stop recording. But anyway, it doesn't matter now because I couldn't. I tried converting it into other formats so that I could get it to play. But yeah, that didn't work, hence I'm doing a new recording. But I think it will help you guys because at least now I have more time to maybe explain some things thoroughly, right? Okay, so like I always say, when you are doing a question, you must first please always take note of the mark and time allocation. But in this case, there is no mark or time allocation, right? So we move on to the next step, which is to take note or read the required. In this case, we are required to calculate the donations tax payable on each of the above transactions, and keyword there being each, because remember, donations tax is paid per donation or computed per donation. You don't aggregate the donations made within a year of assessment and then pay that amount, the aggregate amount. You pay donations tax per donation. Then they tell us to please note that Max has made taxable donations to the value of 1,356,000 rands since 1 March 2018. So again, the keyword being taxable donations. We'll get to what that means when we're doing the solution. But what this essentially should mean to us is that he has not yet gone past the 30 million rand threshold. As such, we will use 20%, right, when computing his liability, because his threshold is still less than 30 million rands. However, if it was more than 30 million rands, we would then use 25% if his taxable donations were more than 30 million rands. Right, so that's what that means. That statement means right there, and we start calculating the aggregate value from the donations that a taxpayer has made since 1 March 2018, or essentially the 2019 year of assessment. And then we'll now get to the scenario. And we are told here, during the 2023 year of assessment, Max Mayer, so that's what we're dealing with, a resident of the Republic, carried out the following transaction. And remember that step 1 requires us to determine essentially whether or not a donation has been made. And we say that a donation is any gratuitous disposal of property or the selling of property at less than its market value by a South African resident. So if, in other words, if someone is a non-resident, then they will not trigger donations tax, because donations tax is only paid by people who are South African residents, right? So it's very important that you take note of you essentially determine the residency of the taxpayer you are dealing with. He carried out the following transactions, and then we'll read these bullet points as we do the solution. But one important thing here is that we are given the dates of birth of the various people affected in this scenario, and it's essentially the members of the Mayer family. And then we'll take note because for limited interest and annuities, you have to determine the taxpayer's age, and then you use the next one, but we'll get to what that all entails. But for now, at least be mindful that you need to know the taxpayer's age, because when they donate a limited interest, then you'll have to compute the present value of the item or the property they are donating. So let's start with bullet point number 1. We're told here that on 1 March 2022, he gave his wife, right, to whom he's married out of community of property, Avril, the lifetime use of the family residence. So keyword there is lifetime use of the family residence. It had cost Max 55,000 rands in 1977 and was now valued at 920,000 rands. So it is now valued at 920,000 rands. Okay, So what does this all mean? First of all, it's very important that we know the regime someone is married under, because if they are married in community of property and they donate an asset that falls within the joint estate, then they essentially donate in equal proportions, so 50%, 50%, right? But in this case, they're married out of community of property, so we don't need to do that. And then in terms of this transaction, Avril has the lifetime use of the familiar residence, and Avril is Max's wife. So let's quickly compute the implications of this transaction. So it's 1 March 2022. Right, and is there a donation? Yes, there is, because Max Myers has gratuitously disposed the lifetime use of the family residence to his wife, right? So the lifetime use thereof is property, so usufruct, right? Is it exempt? Yes, it is exempt. Why? Because this is a donation made to a spouse, right? So it is exempt, and when it is exempt, you stop right there, guys. Like, you stop right there. You don't go on and determine the value of the property being donated. You just move on because you are done. Otherwise, you'll confuse yourself because you say it is exempt here, and then you calculate the value, you apply the exemption, you get the taxable donation, the value of the taxable donation, and then you multiply it by 20%, even though you said here it is exempt. So I have advised you guys, when you're doing donations tax, as soon as you say it is exempt, stop right there, don't carry on, otherwise you'll tax something that is exempt. Okay, let's continue. On 1 March 2022, did I say 2022 there? Oh yeah. On 1 March 2022, he gave his son Barney the family residence, and brackets are told this is the bare dominium, subject to Avril's use, right? So Avril got the usufruct, and Barney, the son, got the bare dominium. So now we must ask ourselves, is this a donation? So it's on the same date. Is this a donation? Yes, it is a donation. Is it exempt? No, it is not exempt, because, guys, it doesn't meet any of those the list of exemptions, right? So it is not exempt. We'll have to explicitly tell you when something is exempt, and you'll have to determine whether or not it meets one of the exemptions. In this case, it meets none, because we didn't even tell you that this is for maintenance, and you don't have to assume that it is for maintenance. So what's the property being donated here? Is the bare dominium to the family residence. Avril got the usufruct, and Barney has the bare dominium. So now we must determine what's the value of Barney's bare dominium, so that we can tax it, right? So essentially, this is a limited interest, and we say full ownership is represented by the market value of the property. In other words, if today you would go and give Max, before you made these donations, you went and gave him 920,000 rands, you'd have full ownership of the family residence, because you'll be able to use it, and you will own it, thus being able to decide when to sell and when not to sell, right? That's the full value of ownership. So we say the full value of ownership is represented by the value you derive from using the property, and also the value of being able to decide when to sell or whether or not to sell, right? So that's the value of the properties. The market value is, well, the full value of ownership is represented by the market value, because if you pay the market value, you then own it and also can use it, right? But sometimes, as in this case here, sometimes people sell different portions or different rights to the property, where one has a right to the use thereof, and the other person has no right to use it, because the right of use is given to someone else, in this case being Avril, but they own whatever they have no right to use, which is Barney. In this case, he owns the family residence, but he did not get the right to use it. So in order to get the value now, because essentially we are interested in the value of Barney's bare dominium, because that's what we want to tax. The bare dominium is essentially the market value less the value of use, right? The usufruct. The value of the usufruct. So we must determine, because we know the market value, right? The market value is 920,000 rands, but we don't know what the value of the usufruct, and that's what we'll try to determine now. So let's do that. So this is a limited interest. So say that step number 1 is determine the market value of the property. In this case, is 920,000 rands, and after that, you must determine what is the annual benefit of using this property. In other words, hypothetically speaking, if you put this property on market as a rental property, how much would you expect to get, right, as a net receipt from this property? And the commissioner says that you are expected to yield 12% of the property, right? So in other words, if you are renting this property, you would expect it to generate 12% of its value per annum, right? Per annum. And then, but this 12%, you can always argue with the commissioner and say maybe 12% is too high. Maybe a property in Senting, Joburg, you can expect it to yield 12% per annum. However, let's say you stay in, let's say what, you are from the Bundus of KZN, a very remote area in KZN, and there you only yield about 5% of or essentially rental properties yield about 5%, which are similar to yours. So 12% would be very much like detrimental to you, because you'll be paying tax at a higher rate than you'd normally need to. And then you write to the commissioner and you say, no, similar properties in my area only yield about 5%, so I think I should use 5 instead of 12. And then if they are satisfied with your response, they will allow you to use 5 instead of 12, right? Okay, let's quickly compute the annual value of this thing. It's 110,400 rands, so that's the annual value. And then we must ask ourselves, what is the shorter life period between the donor's life expectancy and the specified time period, right? So when you're calculating the usufruct for purposes of determining the bare dominium, you only consider 2 periods. You consider the donor's life expectancy. This camera is confusing me. You consider the donor's life expectancy, and number 2, you consider the specified time period. Specified time period would be, for example, she gets to enjoy the lifetime, the use of the family residence for 10 years instead of her lifetime. All right. So you determine, okay, compare, okay, what 10 years versus whatever your life expectancy is, and then you choose the shorter of the 2. So now let's quickly determine how old is Avril, because in this case she got the lifetime use of the family residence. In other words, there is no specified time period, because lifetime means until you die, right? So let's look at Avril. Avril was born on 21 April 1962, and the date today is 1 March 2022. So how old is Avril? If she was born on 21 April 1962, how old is she on 1 March 2022? So let's quickly determine that. So she's currently, say, 2021 minus 1962. During the test, some people got confused as to why we're using 2021. We're using 2021 because she has not yet had a birthday in 2022. The date today, as we've written there, is 1 March 2022, and she was born on 21 April 1962. So she'll have a birthday in 2022 on 21 April 2022, which has not yet come to pass. So hence we're using 2021 instead of 2022. And as you say there, she is 59. So we come here now and we look for the PV factor associated with someone who will be turning 60, because remember she is 59, but we use the next birthday, which is 60. And according to this, maybe let me highlight that, we'll be using 60. And then she is expected to live for 18.78 more years, because remember, she is a female, right? Female. She's a female. So she's expected to live for 18.78 more years, and then her PV factor is 7.34135. That's a present value factor. For someone who will be turning 60, it's 7.34135. So we quickly do that. We quickly say, okay, the value of the usufruct is the annual value, which is the now 110,400 rands, multiplied by the PV factor, which is the 7.34135, right? And that's the value of the usufruct. So let's quickly do that. Start multiplied by 7.34135. 7.34135, and it's 810,485 rands. As such, now remember we said the bare dominium is equal to the market value less the value of the usufruct. So that means the bare dominium is equal to 920,000, okay, minus that right there. Okay, I don't know. I'm gonna do it afresh. 920,000 minus 810,485 rands, and that's 109,515 rands, right? So that's the value of the bare dominium, and then to this value you apply the 100,000 rand exemption. Alright, we apply that, and then we get a taxable donation of 9,515 rands, and then you multiply this value by 20%. Why? Because the aggregate value of his donations does not exceed the 30 million rand threshold. And that's transaction, or that's bullet point number 2. And then a few points here is that remember, he's entitled to the 100,000 rand exemption because it's a new year of assessment. It's 1 March 2022. It's the new day, the first day of the 2023 year of assessment, right? And then here this is the value, like this 9,515 rands, this is the value that affects the aggregate of his taxable donations. So in other words, when something, for example here, the usufruct doesn't affect this total, this 1,356,000 threshold. Why? Because it is exempt, so it doesn't affect it. Hence I say just stop right there, because in some questions you'll have to take note of what the aggregate value of total donations is, so that you are able to determine whether to use 20% or to use 25%. So the values that land in this column are the only amounts that affect that total. So please be mindful of that. Okay. Let us move on now to, let's see, bullet point number 3 says here, on 15 March 2022, in recognition of many years of loyal and efficient service, he gave his housekeeper Clara, so he gave his housekeeper Clara, who was then aged 60 years, 12,000 rands, payable at the rate of 1,000 rands a month for the rest of her life. So this is an annuity, guys, because Sarah will be getting 12,000 rands per annum for the rest of her life. That's an annuity. But in this case, the reason that Sarah got the annuity is because of her loyal and efficient service. In other words, if Clara was not a housekeeper or was not Max's housekeeper, she would not have received the annuity. The reason she got the annuity was because of the employer-employee relationship between her and Max. So, that said, is there a donation? Yes, there is, because there is a gratuitous disposal of property by Max to Clara in the form of an annuity. Is it exempt? Yes, it is exempt, because Clara will include this amount in gross income because she got it for rendering services, right? And you stop right here. You don't continue, you stop here. Otherwise, if you continue, you will confuse yourself, like I've already noted, because it's very important to know which transactions essentially affected the aggregate and which transactions did not, so that you make it easier for yourself to determine when to use 20% instead of the 25%, or when to use essentially 25% instead of the 20%. But that's that transaction right there, and we'll move on quickly to the next transaction. So I told you on 23 March 2022 he gave his daughter Dora a 6,000 rand annuity, and this was for 10 years, right? For 10 years. So now we have a specified time period, whereas here it was for a lifetime use. Also here, when for the with regard to the annuity he gave to Clara, it was for the rest of her life, so there was no specified time period. But in this case we have a specified time period, so let's quickly do this. So this was 23 March 2022. Is there a donation? Yes, there is, in the form of an annuity which has been given gratuitously to Max's daughter Dora. Is it exempt? No, doesn't meet any of the exemption rules. Then we essentially value the annuity. In this case, for annuities, guys, I hope you understand this. We are essentially determining the present value of a stream of cash flows. That's how we do it. When it's the property is like a tangible item, or it's a non-cash flow item, essentially, like for example a lifetime use of a familiar residence, we ask ourselves, what's the market value of this thing, and then how much can this person be expected to be deriving or deemed to be deriving per annum by having the lifetime use of this thing. And then we say that's the market value multiplied by 12%. And then you say, okay, on year one they'll get, for example in this case, on year one you get 110,400 rands, year 2, year 3, year 4, and you said this will go on for 18.78 years. So in terms of a calculation, you can say I per year is equal to 12, which is 12%. N is equal to, for the previous one, 18.78, because we said Clara is expected to live for 18.78 years more. And then where am I writing now? PMT is equal to the 110,400 rands. I think FV, just put it as 0, and then you compute the present value of the stream of cash flows, which will essentially lend you to that amount, right? But the simpler way we use now is this formula, the tables, right? You say, okay, we already know no need for us to know the market value of an annuity, because it's an annuity. He's giving money 6,000 rands per annum for 10 years, right? What we know is the stream of cash flow. What is the annual value of this property? The annual value of this property is 6,000 rands, because he'll be giving his daughter 6,000 rands for a period of 10 years. And then we must now compare the shorter of 3 periods. Take shorter of 3, right? Shorter of 3, the first one is 10 years, because then Dora will be getting this annuity for 10 years, right? So the first one is 10 years. And then the second one is, which is the specified time period. Second one is the donee's life expectancy. So who's the donee? In this case, the donee is Dora. So let's determine how old is Dora. So Dora, where is it? Dora was born on 7 December 1988. So she was born 7 December 1988. So on 15 March 2022, she is, because remember she has not yet had a birthday in 2022, so minus 1988, she's 33 years old, right? She is 33 because she was born in 1988, and she has not had a birthday in 2022, so we use 2021. She's 33 years old, so we come here and look at 34. Why 34? Because since she's 33, we use the next birthday, so she's expected to live for 41.07 more years. 41.07 years, right? And then now we compare the donor's life expectancy. So look at the donor now, the donor being Max. So he was born on 24 March 1958. The date today is 23 March. So he too has not yet had a birthday in 2022. So what you do there is 2021 minus 1958, 63, right? And then you go look at 64. You go look at 64. He's a guy, so 12.31 years. 12.31 years. And then obviously the shorter of the three is the 10 years. The shortest period of the three periods there is 10 years. And then you will now use the PV factor associated with the 10 years to compute the value of the donation. So the PV, the present value of the donation, will be equal to our annual value multiplied by the PV factor of 10 years. Right, and that means 6,000 rands multiplied by, now let's look at the PV factor. And remember guys, now we use table B, and you use table B whenever the shortest period is the specified time period, or you are dealing with a company. In the case of a company, you will use 50, which is, 50 is here, it's good, 50 years, right? Fractions of a year to be disregarded when using this table. Okay, I didn't know that. And then, but then our shorter time period is 10, right? So our shorter time period is 10, so we'll choose 5.6502. 5.6502. So 5.6502. Right. So then we compute the value of the present value of our annuity times. Okay, wait. Times 5.6502, and it's 33,901 rands. And then you've already applied the general, you already fully utilized it, right? Remember that we've fully utilized our general exemption. So here it's 0, and then our taxable donation is still the 33,901, and then you just multiply that by 20%, and you get 6,780 rands. Right, that's the value of the donation, and yeah, we are done with this part. We are done with this part, and we move on to the next part. So we move on now to the donations on 1 April 2022, right? So on 1 April 2022, he gave his son Edwin 1/2 of the profits of Max's clothing business for the remainder of Edwin's life. So essentially for Edwin's life. To Edwin's son Frank, he gave the 1/2 share in the business, subject to Edwin's entitlement to the profits. So this was subject to Edwin's entitlement to the profits from it. The average annual total net profit of the business before tax over the past 3 years was 800,000 rands. So this is the average annual total net profit of the business before taxes was 800,000 rands, but the business has recently been valued by a competent authority at 2.4 million rands. So now to really explain what is really happening in this scenario, on 1 April 2022, Max donated 1/2 of the business, but he split his donation. He donated half ownership of the business to his grandson Frank, or Edwin's son, right? But then Frank will not be able to enjoy the profits produced by his half ownership of the business, because he'll enjoy them subject to Edwin's entitlement to the profits. In other words, the profits of that half ownership that has been donated to him have been donated to Edwin, right? So it goes back to that whole thing of usufruct and bare dominium, right? Where Edwin gets to enjoy the fruits produced by the business, but he cannot make any decisions because he doesn't own the business, right? On the other hand, Frank cannot enjoy the fruits produced by the business, right? But he owns the business. So Edwin in this case is the usufructuary, and Frank owns the bare dominium, or has ownership of the business. Then another point of contention might be, okay, now which one do we use between the 2.4 million rands or the 800,000 rands, which is the average annual total net profits for the past 3 years? In this case, we use the 2.4 million rands. because if you were to go to market, okay, I don't know. I want to do it on this one. If you were to go to the business, to the market and buy this business, you would pay a market value of 2.4 million rands, which will give you full ownership of the business. That is the right to both enjoy the profit produced by the business and the right of ownership of the business, meaning you can decide what happens in the business and whether or not you want to sell the business, right? So yeah, and then this was just essentially there to confuse you, because we normally take this value if we're dealing with works of art, pictures, movies, paintings, pictures, or any other works of art. You take this. I forgot, I was trying to search with a student yesterday where this thing is written on silk, but if you read silk, you will see it tells you that for works of art in the form of pictures, paintings, etc., you take the average annual total net profits produced by those works over the past 3 years, right? But for any other type of property, in this case a business, you take the market value of the property. So let's quickly do that. So it's 1 April 2022, right? And then is there a donation? Yes, he has gratuitously disposed of half of his business, right? But let's first deal with Edwin, who got the usufruct of the business. Is it exempt? No, it doesn't meet any of the exemptions. Why? Because it's not for maintenance, so it doesn't meet any other provisions for those exemptions, so it's not exempt. And then now we determine what is the market value of the business. The market value of the business is 2.4 million rands multiplied by 50%, because it donated half ownership of the business. So that is now 1.2 million rands. And then we determine the annual value, right? And the annual value will be the 1.2 multiplied by 12%, which is 140. Wait. Oh, I say 0.0, which is wrong. It's supposed to be 0.12. It's 144,000 rands, right? That's the annual value. And then now we compare the shorter of 3 periods. Shorter of Max's life expectancy. How old is Max? Because Max is the donor, so we compare the shorter between the donor's life expectancy, the donee's life expectancy, and the specified time period, in this case, which is, we don't have a specified time period, because he gets to enjoy the business profits for the rest of his life. So Max was born on 24 March 1958. So today is 1 April 2022. So if that's the case, then it means this dude is 64 years old on 1 April. He's 64 years old. It's 2022 minus 1958. So he's 64 years old. And if that's the case, we come look at the life expectancy of a 64-year-old. You come look at, but then remember, since it's 64, you use the next age, which is 65. So he's expected to live for 11.77 more years. So 11.77 more years, and then we look at Edwin's life expectancy. So Edwin, when was he born? 11 February 1992. So since it's 11 Feb 1992, so he's already had a birthday in 2022. So he's currently 30 years old. So if he's 30, we come here and we look at 31, right? And he's expected to live, because he's a male, 37.57 more years. He's expected to live for 37.57 more years. So okay, maybe do that. So the shorter of the two is obviously the one for Max, right? That's the shorter of the two, 11.77. And then we then say, okay, the value of the usufruct is that the annual value multiplied by the PV factor, which in our case is 144,000 rands multiplied by what's the PV factor associated with 65-year-old male? It's 6.137. Okay, I'm gonna do this. 6.13789. Okay, I don't know why this thing doesn't want to copy it. Okay, no, that's cool. 6.13789. So that's the PV factor we're gonna use. 6.13789. 6.13789. Let's quickly compute that. So that is 144,000 rands multiplied by 6.13789. 883,856 rands. Right. That's the value of the usufruct. He's used up his exemption. So the taxable donation is 883,856. But let me just make sure it's 6.13789. 6.13789. Okay, that's correct. Okay, cool. And then our donation is 20% of that, which is 176,771 rands. Right, that's our donation. And then now we deal with the second dude, which is Frank. Is it exempt? No, because it doesn't meet any of the provisions for exemptions. And then we determine the value now of Frank's bare dominium, right? And then in that case, as already said here, the market value is equal to the value derived from using the thing and the value you get from owning it. And so that we can say the value of ownership is essentially the market value minus the value of using the said thing. And then obviously our annual value, our market value, guys, still the same thing. It's still the 1.2 million rands because it's 2.4 multiplied by 50%. And our annual value essentially is also the same 144,000 rands. But now we must look at the life expectancy of the donee. In this case, the donee being the person entitled to the usufruct, right, or the profits or the fruits, and or the specified time period. But there is no specified time period, so we'll just look at Edwin's life expectancy, which we've already noted that is expected to live for 37.57 more years. And what is the and thus our use will be, okay, let me just copy this and put it here. Our use will be the annual value minus multiplied by the PV factor associated with 37.57 years. Right, remember now we're dealing with Frank. Maybe let me just put a line here of separation, right? And then we'll just say, so that will be 144,000 multiplied by, we'll look for the PV factor of a 31-year-old male, which is 8.21538. 8.21538. Right, and then the value of the usufruct will then be, let's see, the value of it will be that multiplied by 8.21538 will be 1,182,015 rands, right? So the value of our bare dominium, if you remember from this equation right here, the value of our bare dominium will then be 1.2 minus that value right there, which is 16,985 rands. He's used up his exemption, so the taxable donation is that, and then we need 20% of that multiplied by 20%, and you get 3,397 rands. And that's as complex as it gets, guys. Honestly, you just need to be mindful of the little things like the age. Make sure you use the correct age. You make sure you can determine the taxpayer's correct age. Well, when using the table, you need to use the next birthday, right? So if a person is 30, use 31. If a person is 64, use 65, so on and so forth. But then remember, you don't use the actual life expectancy, but the PV factor associated with the life expectancy. And yeah, that's as complex as it gets. Okay, let's move on to the next one now. We're told here on 1 May 2022, he gave 20,000 rands to a registered political party. So he gave 20 G's to a registered political party. We quickly do that. 01/05 2022. Is this a donation? Yes, he has gratuitously disposed of property of 20,000 rands in cash to a political party. Is it exempt? Yes, because donation to political parties are exempt, right? And you move on. Like I said, once you've said it's exempt, don't do any extra things. You'll only confuse yourself. Just move on. And then on 1 July 2022, Max waived the full debt owed to him by his son. Oh wait, I skipped a bit there. On 1 June 2022, he gave 20,000 rands to a PBO. Again, we ask ourselves, okay, so it's 1 June 2022. Is this a donation? Yes, he has gratuitously given property or disposed property to a public benefit organization. Is it exempt? Yes, because it's a donation made to a PBO. Right, and then remember, for this one, it was made to a PBO. It will have normal tax computations because you can claim it as a deduction. Alright. So remember that if it was a two-part question where you first deal with his donations and then you have to compute his normal tax implications, you'd have to take this into account at the end before you determine his taxable income. So remember that. And then we come to the last one now. On 1 July 2022, Max waived the full debt owed to him, so full debt there, owed to him by his son Edwin, to whom he had lent 8,000 rands on 1 July 2021 at an interest rate of 10% per annum. Capital and interest were payable to Max on 1 June 2022, so a year later, because he lent this on 1 July 2021. So a year later, he waived the full debt. Right, so now must calculate this thing, the donations tax implications of it. So it's 01/07/2022. Is there a donation? Yes, there is a donation. Is it exempt? No, it's not exempt. What's the value of the donation? The value of the donation is the 8,000 rands multiplied by 100%, which is 8,000 rands plus 10%, so 1,1. And that gives us a value of, let's say, 8,800 rands, right? 8,800 rands, and then he's used up his exemption, so the total value is still 8,800 rands, and then he'll get taxed at 20% of this, which is 1,706 rands. 760 rands, not 706 rands. Yeah, and yeah, that's the recording I lost essentially yesterday. But I hope maybe even for those who attend the class, they'll get to see some things in more detail. But yeah, guys, one thing I may advise is that when you're dealing with donations tax, please make sure you follow these steps. In other words, do it in a table formula, because in a table format, because if you do that, it's very hard for you to skip a step. And then just remember that when something is exempt, to stop right there. And okay, I don't know why that keeps popping up, it disturbs me. If something is exempt, you stop right there. You don't continue and determine its value and apply the exemption. Why? Because it's exempt. Stop right there. You will get full marks for it. And then what else did I want to say? Oh yeah, for this one, when it comes to this one, here we were lucky. If you notice, all the transactions occurred within 1 year of assessment. However, some transactions may occur within 2 years of assessment. If that's the case, remember they'll be entitled to a fresh 100,000 on the new year of assessment. So you'd have to apply this like we did here, and then on the new year of assessment, let's say there's another transaction which occurred on 1 April 2023 for that fresh transaction, which is not exempt. Remember, because if it was exempt, you'd stop right here. Which is not exempt, you'd have to determine its value. Let's say its value is 150,000 rands, and then you'd have to apply the new now 100,000 rand exemption for the new year of assessment, thus taking your value to 50,000 rands, and you tax them on 50,000 rands, for example. So be mindful of that. And then what other thing do I think is very important? Oh yeah, it's 20%, like we already wrote here. If the aggregate value of his taxable donations is less than or equal to 30 million rands, use 20%. But if it's more than 30 million rands, then it's 25%. And yeah, guys, that's it. Thanks a lot, and enjoy the rest of your day, and good luck with test 5 preparations.